Welcome back to Algobot, where we break down automated trading strategies for the MetaTrader 5 platform in plain, practical language. I'm your host here at Algobot, and today we're exploring an expert advisor called Body Flow Regime Shift. This one takes a fresh angle on a familiar idea. Instead of reacting to raw closing prices, it studies the flow of conviction inside each candle's real body, measured against market volatility. Over the next several minutes, you'll learn how it reads that body flow, how it separates long signals from short signals, and how it manages its stops and targets. Remember, everything here is educational information only and never financial advice. Let's start with the big picture. Body Flow Regime Shift is a trend and momentum expert advisor, and its central idea is that a plain close-to-close price series actually blends two very different things. Part of each bar is committed and directional, and that's the real body, the distance from open to close. The other part is exploratory noise, the wicks, which are probes that get rejected and leave no lasting intent. Classic moving average crossovers run on the close, so wick-heavy indecision bars still drag those averages around and create whipsaw signals inside choppy conditions. This strategy deliberately strips the wicks out and works only on the flow of conviction. Here's how it builds that. For every freshly closed bar, it takes the signed real body, close minus open, and divides it by the current average true range, the ATR. That gives a stationary, unit-free number the code calls conviction per bar. A reading near +1 means a full-range bullish body, near -1 means a full-range bearish body, and a reading close to 0 means an indecision bar where the market committed to nothing. The EA keeps a rolling series of these readings and takes two moving averages of it, a fast body flow line and a slow body flow line. The difference between them describes the net directional conviction of the recent regime. Because everything is normalized by volatility, the approach behaves consistently whether the market is quiet or active, and it runs entirely on the primary time frame you choose in the backtest. It works on any single time frame the tester selects, using nothing but open, high, low, and close data. In terms of who might study it, this is aimed at traders curious about momentum systems that filter out indecision, and anyone who wants to understand how normalizing by volatility can make a signal more comparable across different conditions. As always, this is a framework for learning, and trading always involves the real possibility of loss. Now let's walk through the exact logic, step by step. The expert advisor acts once per completed bar. When a bar finishes forming, the EA appends it to its buffer and computes the ATR over the ATR period window, which defaults to 14 bars. It then takes that closed bar's signed body, close minus open, and divides by the ATR to get the conviction reading for that bar. It stores this in a rolling series. From that series, it computes four values. It takes the fast average using FastPeriod, which defaults to 5, and the slow average using SlowPeriod, which defaults to 20. It computes both of those for the current bar and for one bar earlier, so it can detect the moment they cross. The long signal has two conditions that must both be true. First, the fast body flow must cross above the slow body flow, meaning it was at or below the slow line last bar and is now above it. Second, the fast body flow must be at least the entry threshold, which defaults to +0.05. That threshold gate is the key idea. It means the EA only acts on crosses where the fast flow is already committed to the upside, so it skips the low conviction crosses that cluster around the 0 line during ranges. When both are satisfied, the EA signals a long and buys at the ask. The short signal is the exact mirror image. The fast body flow must cross below the slow body flow, and the fast body flow must be at most negative entry threshold. When both hold, the EA signals a short and sells at the bid. Risk management is volatility scaled and identical in structure on both sides. The stop distance is StopAtrMult multiple times the ATR, defaulting to 2 times ATR from the entry. The take profit is RewardRisk times that stop distance, defaulting to 1.6 times the risk. So for a long, the stop sits below entry and the target sits above it. For a short, the stop sits above and the target below. The EA holds only one position per magic number at a time, and once a trade is open, that stop loss and take profit bracket manages the exit entirely. There is no averaging in and no second position stacked on top. It's a clean, one trade at a time framework. Let's read through the actual MetaTrader code on screen. At the top are the input parameters. ATR period is the volatility window used both to normalize bodies and to size the risk bracket. FastPeriod and SlowPeriod define the two body flow averages, the responsive line and the slower baseline. Entry threshold is the minimum committed conviction the fast flow must show at the cross, defaulting to 0.05. StopAtrMult and RewardRisk shape the exit bracket, and lots and magic control order size and identity. Below the inputs, the EA defines two simple booleans. Cross-up is true when the fast flow was at or below the slow flow last bar and is now above it. Cross-down is the opposite, where the fast flow was at or above the slow flow and is now below it. It then computes the risk once, as StopAtrMult times the ATR of the just closed bar. Now the two signal blocks. In the long block, the condition is cross-up and fast now greater than or equal to entry threshold. So both the upward cross and the positive conviction gate must hold. When they do, entry is read from the ask, the stop loss is entry minus risk, the take profit is entry plus reward risk times risk, and the call to trade by places the order. In the short block, the condition is cross down and fast now, less than or equal to negative entry threshold. The entry is read from the bid. The stop loss sits above entry at entry plus risk. The take profit is entry minus reward risk times risk, and trade.sell places the order. Both sides are perfect mirrors, wrapped in the same volatility scaled bracket. Let's bring this to life on the chart, walking through a long trade and then a short trade in sequence. Notice the subpanel below the candles. That's the body flow oscillator with a gold fast line and a blue slow line, plus dashed threshold references at positive 0.05, at 0, and at negative 0.05. Look at the first three candles. Price is drifting lower, and each candle prints a bearish real body. Down in the subpanel, both the fast and the slow body flow lines sit well below the zero line, confirming that recent conviction has been to the downside. There is no signal here because nothing has crossed. Now watch the fourth candle. A bullish body forms. The market finally commits some intent to the upside, and the gold fast line lifts sharply. This is the moment. The fast body flow crosses above the slow body flow, and just as importantly, it pushes above the positive 0.05 up threshold. Both conditions are satisfied together, so the EA signals a long and the buy entry marker appears. The stop loss is placed below entry at 2 times the ATR, and the take profit is set at 1.6 times that risk distance above entry. This is why the threshold gate matters. Back on candle 3, the fast line had begun turning up, but it was still below the slow line and nowhere near the threshold. So the strategy stayed patient and waited for genuine commitment. From there, candles 5 and 6 extend the move with solid bullish bodies, and the gold line climbs toward the top of the panel while the blue baseline follows more slowly. Conviction is clearly with the buyers. On the 7th candle, price reaches the take profit target and the long is closed for a completed trade. Notice we never once spoke about wicks during that run. The upper and lower shadows were treated as noise and discarded, exactly as the strategy intends. Now the regime shifts. On the 8th candle, a strong bearish body forms, and you can see the long upper wick where an attempt higher was rejected before the close came in lower. In the subpanel, the gold fast line collapses down through the blue slow line and pierces below the negative 0.05 down threshold. That is the mirror image condition. The fast body flow crosses below the slow body flow while committed to the downside, so the EA signals a short and the sell entry marker appears. Here the stop loss sits above entry at 2 times the ATR, and the take profit is set 1.6 times that risk distance below. Candles 9 and 10 follow through with bearish bodies as sellers keep control, driving price down toward a fresh low. On the 11th candle, price reaches the short take profit target, and that trade is closed as well. So across this sequence you've seen the complete cycle. Both flow lines below zero and no trade. An upward cross above the threshold generating the long, a downward cross below the threshold generating the short, and a volatility scaled bracket managing each exit. The strategy is always asking one question. Where is the committed conviction flowing right now? Ignoring the indecision in between. That brings us to the end of our look at body flow regime shift. We covered the core idea of reading conviction from the real body of each candle, normalized by ATR into a unit-free flow. We walked through the fast and slow body flow lines, the crossover logic gated by the entry threshold, and the mirror image long and short signals. We also stepped through the MetaTrader code and illustrated a full trade cycle on the chart, complete with volatility-scaled stops and targets. Everything here is educational information only, and it is not financial advice, a recommendation, or a solicitation. Trading carries real risk, and losses do happen. If this breakdown helped you understand the approach, please like the video, leave a comment with the strategy you'd like us to study next, and subscribe for more MetaTrader 5 analyses. You can learn more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.